Welcome to another video by the Market Maker SA. I hope you are doing good. I hope you are doing well. I hope you are trading strong. I hope you are trading strong this week. Before we get into this video, don't forget to like, comment, and subscribe. Don't forget to hit that notification bell icon to be notified in case we drop another video. Especially this year we'll be dropping a lot. So be on the lookout. Well, today I'm sorry, my voice is a bit messed up or I make a few errors. I am a bit under the weather, but I'm gonna try my best to educate yours. Yeah, so today we'll be looking at lower time frames. Today we'll be looking at lower time frames. More specifically, we'll be looking at how we can implement SMCs in the lower time frames. We're looking at it further and identifying how can it work. We're gonna start on the M5, start on the M15. Obviously the M15 work is our higher time frame, so let's begin. We'll start with right now we're at the US 30, so let us begin. So right away at the moment on the US 30, you see we have highlighted that area right there on top, highlighting it as a peak formation high. That's the anchor that's driving price down, and we've already identified on the higher time frame where we are currently looking at price to go to. In this instance, market has given us that mitigation block, and well, market has given us that mitigation block, and the only probable setup that I see is right here on that order block right there on top. So that's an area that I'm looking at market to trigger right now. At the moment, I'm not seeing market reacting to that area that it's at right now. Even though, if you look again though, see, part this is where the contrast is. Because when you look at your, okay, so there is no contrast. Okay, yeah, never mind. So as I was saying, looking at that area right now to currently attack and try to maximize and make as much money as possible. And already we can see we're at the point where there was an imbalance field that had to be filled by the market, and as you can see, market filled it splendidly. So we know where the direction is going. We know that we're currently buying short term at the moment until we get into that area, and then we can look for trades away. So that's very nice. So if we drop down to our M5, which M5 and 1 minute will be the key components of this of the class we're doing today. As you can see right there beautifully, is that right now on the M5, obviously on the M5 right now at the moment we have this peak formation low. Market has given us this peak formation low retracement area, bit of a small retracement area, nothing crazy, and market is off. Market left with extreme velocity. And I've heard of from one of my friends, one of my members in the group, who has been studying this pair a lot, was telling me that this pair is quite volatile, and it doesn't have to be volatile on news days. It can be volatile at any time. So I was like, interesting. I'm gonna look at it. So back on the M15, we've identified that. Now obviously we have to start looking for areas of interest where we can attack the market. And what I saw very nicely on my higher time frames is I saw this fair value gap right here. This fair value gap forming very nicely. I don't like that down candle order block there because it's a doji and it's too weak. So we've identified this beautiful down candle order block right fair value gap right there on the H1. We were gonna use it as our confluence. And obviously right now at the moment that's literally because of the gap that then becomes a structure breaker right there, and it becomes our mitigation block. So we've identified our mitigation block, and that means we've identified our mitigation block and we've identified the points of interest that is in our mitigation block. So then obviously after here we start looking at entries. We start looking at entries and liquidity. And as you can see at the moment right now, market hadn't touched gone into that area, so it was still fresh. But what market did is market showed a bit of people a bit of money, Market showed a bit of money, especially in this area where people could have bought. People could have came back on this order block right here and bought. And the best part about it, obviously, when they bought, their stop loss was probably put down here, and you see that that move was quite small, but it had a lot of money, but it was quite small. The best part about it, best part about pairs and indices that show a lot of money is that they can make you more and more comfortable. That was something that we used obviously to our advantage in this area, because we know, okay, there are people who are in there and there are people who are holding for long. Thus, they become liquidity. They become our liquidity targets, and they become targets that we expect the market to take out before it goes into our direction. And as you can see, what market has done, market has came here giving us an accumulation. Market has manipulated down into that area, and market right now is currently distributing in a very, very, very nice way. So I like how market is looking right now, especially right now, because we see what market then did is market did very splendid thing. Once it entered into that point of interest that we're looking at, market came back to this down candle order block. It's quite decent. It's quite decent. I don't mind it. Came into that down candle order block. If we drop to our H1, market is already moving away from that area already, because market came into that area. And in the H1, of course, that area then becomes our fair value gap right there. Our fair value gap added up with our mitigation block. So obviously, once that has happened, we know it's time to kill. It's time to kill the market. It's time to put your house on that, and let's make this money. And then obviously, your external liquidity will be right there on top. Your external liquidity will be right there on top. Areas where you can then target for take profits. So that's an interesting trade. Something that I might definitely, I don't mind taking on paper. Taking it on paper, so the next time we make a video I can show you that this trade definitely worked out, because it's looking like a gorgeous trade to take for the day, especially it being a Tuesday as well. See our there was a previous trade that we took there off paper, and it's in profit, I think. So that's a very, very nice stuff, something that I like very much, and the best part about the Dow Jones 30 is that there's a lot of money in this pair. It's already in blue right now. There's a lot of money in this pair, money that I like a lot. So yeah. Very, very interesting stuff. Just put our stop loss down below there. That's a lot of money to risk though. We'll put it below the order block. Put it below the down candle order block. Make it $1:200. It's a bit of a scam, but 1:2 decent stuff. And yeah, it's already in profit right now. Might just break even, but yeah, stuff that I like a lot. So we'll be looking for it to target, those highs, that external liquidity where people might have traded selling, and obviously we're expecting it to come into that area. So very, very nice stuff. Very, very nice stuff that I do not mind at all. Let's look at Bitcoin. See how we can then attack the market on the Bitcoin. We'll start from the H1. We'll use it as a we'll use it as a micro view, so we can see how we can do this. And you can see on the H1, we can already see that market obviously made this peak formation reset pattern, and market is already dropping. That move has already broke significant structures. As you can see, market broke that structure, and market has already traded into our mitigation block right there, or the first major structure that was taken out has gone into a mitigation block. Obviously, that mitigation block was then coupled with that with the supply zone right here. Let me just fix it there. It was then coupled with the supply zone right here. Very, very nice stuff that I like to see. And obviously, when you drop down to your M15, M5 for a minute, you want to look at it properly. Obviously, market then came to that area, gave us a nice M formation right there. M formation / head and shoulders type formation. So it gives us further confidence that we are going to the right direction, especially with the break of structure there. And obviously now, what we've identified is right here. We've identified this fair value gap right there that's driving price, because right there on top there's not a lot of up candle order blocks that can make us think otherwise. And you can see market came into that fair value gap, Market came into that fair value gap, gave us 1, 2, 3 drives, gave us 3 pins to the high, basically gave us a 3 pin information, and market is currently away. Market is currently away in a very, very nice way. Stuff that I like. Obviously, when you start counting your levels, remember your levels are very, very crucial. When you start counting your levels, it's very, very key to understand that it's 1, 2, and obviously the roll out from here becomes our 3. So very, very crucial and important thing right there. And obviously market is already coming away. Then obviously we'll be aiming the market to hit this type of areas down here where the external liquidity is. These type of areas right here. Very, very nice stuff. We'll be aiming for the market to take out those areas right there, as obviously there were people who are in there trying to buy this chart, trying to buy this pair, trying to make their money, and obviously they were then taken out. So obviously right now we can't paper trade it because we're kind of late to go into it. So it's something that we'll look at to maybe come back as a retracement, or market at displaces what's that, separates away with extreme velocity, opening up imbalance field that has to be filled. And then obviously we'll start looking for sales. So that's very, very nice stuff. There's stuff that I really like to see. And yeah, I mean, if you drop down to your H1 to further see that 3 drives pattern, I call it 3 drives because the market came into it 3 times and dropped. See right there, market came to it. Market came to it once, market came to it twice, market came to it a 3rd time, and then market is dropping, breaking significant structures as well, as you can see. And market is gone. Market is gone. There you go again. Market is gone. Go again. Market is gone. Obviously, they're making those supply zones there that are very crucial. So yeah, guys, that's how you combine your SMCs and your lower time frames. In my opinion, it's a very, very helpful tool. You know, it's a tool that I used to underrate a lot when I was starting trading, but it's something that I've appreciated even more these days, because they do respect SMCs a lot, and you can make money much quicker. So it's really a no-brainer. You just have to understand your higher time frame bias, and then when you get down to the lower time frame, understanding your high time frame bias will make your trading much easier. It's really that simple. So yeah, this is something that I would add to my arsenal if I was a trader as well. Definitely. So yeah, guys, thank you all for watching. Don't forget to hit the like. Don't forget to hit that like, and don't forget to comment. Tell us where you're watching from. Don't forget to subscribe. And yeah, thank you, guys. Trade strong, guys. This year's gonna be this week is gonna be a good week. This year is gonna be a good year. Trade strong, guys. And yeah, hope you are doing good. Goodbye.